Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, January 13, 2017. S&P 500, Dow Jones Russell 2000 are all trading near all-time highs, while the QQQ has hit all-time highs and closed at them at the all-time highs. So technology and financials are leading. I'm seeing a bullish divergence on healthcare. We'll look at a couple of ETFs I don't normally trade, but uranium, that's a 52-week highs for some reason. While solar ETF is attempting to bottom. We'll look at that. I'll show a recent trade example that we did at MasterChartsTrading.com, and that's for EURUSD, the Brazil ETF. Again, the high yield bonds are at 52-week highs, and this is good for stocks. We'll look at corporate bonds and treasuries, which are finally seeing some selling. Then we'll delve into Forex universe with a dollar, which is dollar index is turning somewhat volatile, and we'll look at euro, sterling, and yen in a little more detail. Then we'll also look at gold, which is taking advantage of weakness in the dollar. Oil may be ready to finally roll over after recent uptrend, and we'll look at natural gas, which is, I think, finding support after last week's big drop. All right, let's look at the S&P 500 ETF SPY. And this is a daily time frame with dividends added back into it. In other words, this is a total return index. Just last week we hit all-time highs. We had an attempt by the bears to push the prices lower, and this candle looked kind of bad. It kind of looked like this, but then we found basically the bull stepped in on Thursday and immediately and pushed the prices higher, and next day we gapped out. There's a small gap there and pushed higher again. We didn't make an all-time high, but this is a very bullish chart, so I would certainly be looking to be buying this and not selling this chart. As far as advanced decline lines, advanced decline volume, I don't see any major divergences. There's a very minor one where like 3 points away. I'm not sure I can call it divergence. So far so good basically for S&P 500. The Dow Jones Industrial Average also hit all-time highs last week, and this is a very strong move, a very good looking chart. Again, I don't see major divergences. It looks like we are more or less trading. In other words, the participation is broad. Here's IWM, the Russell 2000, also at all-time highs, very bullish chart again. Also, advanced decline lines are also hitting all-time highs. So this is showing even broad participation among small caps. Here's QQQ, the Nasdaq 100 ETF. This one used to be underperforming here, following November elections. I said that this is a temporary underperformance and a buying opportunity. If you listen to my videos, I kept saying this around here in November, beginning of December, and this is now at all-time highs. So looking very strong. I mean, it's a little bit overextended, but that does not mean weak or, I would highly discourage, especially beginner traders, from attempting to short this ETF. All-time highs and advanced decline line, all-time highs and advanced decline volume line. So participation in this advance is once again broad, and I would discourage people to attempt to time the short entry on this. Rather, look for a opportunity to go long. XLK, this is a all-time highs as well, very similar to QQQ. Well, they have very similar stocks composition, but XLK actually outperformed even QQQ a little bit. But now I think it's QQQ is catching up basically. Also all-time highs in advanced decline lines, so participation is very good. XLF financials, just this Friday we hit all-time highs. I mean, this is a little bit of a rejection look here, but the fact that we're even trading this high up here and kind of attempting to go higher just shows that there is a lot of interest in owning stocks, especially financial ones, and also no divergences just yet. Here's one divergence. This is consumer staples. This one has just really had a poor participation in this rally from November lows. I mean, it did rally some, but not nearly as much as some of the other ones. So this is more a defensive sector, and it seems that now money is favoring offensive sectors. Again, how long this will continue is difficult to say. Maybe tomorrow the forces that maybe will say, oh wow, look, this looks underperforming, let's push the prices higher. There is a bullish divergence that I see here. There's a lower high here in the index itself, but I see a higher high in the advanced decline lines. So it's possible that we'll go higher in the XLP to catch up to the rest of the market. Same thing goes for XLV. This is healthcare, also a bit of a defensive sector. The important thing here is this advanced decline line actually hit all-time high as well. So this is clearly a bullish divergence, even higher than here in August. And you can see in August this is a strong move here. So I think that XLV and XLP will attempt to catch up to the rest of the market and push higher from here. Here's an ETF I don't normally trade. This is Uranium. It's basically Cameco CCJ. Like 30% I think is Cameco of this ETF. But in any case, this just shows a nice interesting pattern. Looks like we have a breakout here above previous highs and now 52-week highs. And it's kind of difficult to see here on a daily chart, but if you go to weekly chart or rather even monthly chart, so this is a monthly chart of the uranium. And what I wanted to point out here is that just at the end of 2015, beginning of 2016, these were all-time lows for uranium. So you can see that it took a long time for this bottoming process to finally reach fruition. You can see that it attempted to bottom here in 2016, had a rally, but then pulled back almost to the 52-week lows, all-time lows, but now had a strong breakout. So now it looks as if it's a legitimate breakout. Although you have to understand that, for example, here we also had a legitimate looking breakout, and look how that worked out. It didn't. So it's possible that uranium now is bullish. Of course, I would never buy up here. We'll still need to pull back to basically look for a buying opportunity. Here's another ETF that looks like it wants to bottom. This is 10 solar ETF. So we had a gap here in November, but then we had this big red hollow candle, and the hollow candles are usually good signs. And in this case, red hollow candle was a large one. So, and since then we just kind of been moving higher and higher, and looks like we were closing about a 50-day moving average here. So it looks interesting. Is it enough? Let's take a look at monthly. And here's the chart of 10, same thing. So this right here in October are multi-year lows because each stick is 1 month. So this is going back to 2013. Just like I showed with uranium, you can see that it took a long time to bottom, about a year. So should we jump in and buy 10 right now? It's possible, or it's possible we're going to continue lower to all-time lows. Here's a trade that I actually have a position open myself, and I sent an alert out to my subscribers here. This is Brazil EWZ. So I sent an alert out on December 22nd, right there, and looks like very nice looking trade. Basically, it went straight up. You know, my favorite kind of trade when it just goes immediately in your favor. So what I do usually, I send out an alert, and I have risk controls built right into the trade, so that you have, let's say, you're risking $100. That means you buy in this many shares, and you have targets where you could potentially take profit. So in this case, there's currently about a 15% open profit, and just in a few weeks, basically. So do consider signing up at MasterChartsTrading.com. Right, moving up the quality ladder. Here's junk bonds, JNK. In the daily time frame, this is a total return. In other words, the dividends are added back into the price. This are all-time high here on Tuesday of this week. So this chart pretty much speaks for itself. This is clearly a bullish chart. Additionally, junk bonds correlate highly to the general stock market, so it's almost an extension of the stock market. And all-time highs in junk bonds is a good sign for the general stock market. So here is the same chart in the weekly time frame. Very impressive move of the lows here, and then finally all-time highs here. Again, you can see the correlation to junk bonds to the stock market is very high. So as we move up the quality ladder, here the investment grade corporate bonds ETF, same general idea. This is liquid LQD, and it has a dividends added back into the price. So it's kind of difficult to see where this is going. There is now a significant possibility that bonds have entered the bear market. So now it looks like we have, had bottom in action here, and finally, at the very least, a short-term breakout above this high here. And now what we're seeing is a little bit of selling here, but I wonder if this is enough, and I wonder if maybe this gap needs to be closed first before the real, bears step in. So this is the same chart on the weekly time frame, and you can see this big red candlestick, which includes this big gap. So I think we may need to still retest like this area here on 120 before the bears either step in or we're going to continue higher. I mean, right now this chart does not look that bad. We can make a claim that this is just a retest of this breakout that occurred here in 2016. So we had a breakout, 52 or rather all-time highs, pullback, a rather deep one, and now a retest. So it's entirely possible that we're going to have a successful retest. In other words, we'll continue to all-time highs. Another possibility is we don't, and we unravel and continue lower. This is especially more obvious on TLT because this is a more volatile ETF. This is a 52-week lows on TLT, so this is the weekly time frame, all-time highs, and then just unraveled to 52-week lows. And this is including dividends, actually. So even with them, there's still quite a bit of downward pressure on treasuries. So there's still this unfilled gap here, and I have a suspicion that we're still going to push higher before any kind of bears, before the real bears step in. So maybe this gap needs to be filled first. And then I don't know, I mean, but it's possible that we are indeed now in a bear market for bonds. And this will depend on whether the bears will step in and push the prices lower again. Okay, moving on to the Forex universe. This is US dollar on a daily time frame. So this is still, I think, a bullish chart, and right now looks like we get an uptrend, and now we're seeing a pullback basically here. These are multi-year highs, so a pullback from multi-year highs is something normal. There is a little bit of concern here with this rejection spike. This occurred on This occurred on 11th of January. So I was wondering what happened on 11th of January, because it's already on Friday the 13th, and I forgot what happened. So I had to go do some news. So I found some pictures. On the 11th of January, there was a fire in Cape Town. I didn't think that was it. Some Hindu holy man is undergoing a eye exam. I don't think that's what moved the dollar. Meerkats in zoo in Stuttgart, don't think they moved the dollar. Unfortunately, some kind of immigrants in Belgrade, I don't think that moved the dollar either. But now, okay, here we go. So we had a press conference by President-elect Donald Trump on January 11th. And then I went back to DXY. This is a 10-minute chart, and you can see there is this huge volatility during his press conference. I mean, overall, the effect on that particular day was rather muted. It was a very small loss. But you can see that during the speech, during the debate, it was rather pronounced. So there was a lot of volatility. So this, should be kind of like a warning to the future of what's going to come, because I'm sure there will be more of those similar types of events coming up. Nevertheless, let's go back to our charts. This is a weekly time frame for the US dollar. These are multi-year highs, I think like 13 plus year highs. We have been sliding for the past 3 weeks, so I wonder if the slide is done. Difficult to say. I mean, this is a very strong move from like March here, so that's significant move. So some sort of a pause here would be normal. Still a bullish chart though, and I think we had a valid breakout here in November for the dollar. Here's a chart of euro versus US dollar. So far, the 50-day moving average has been acting as a resistance, and so far it has not been able to pierce through. Whether or not next week will be, we will get rejected here again is difficult to say, and it's kind of difficult to see here. But in the next chart, I wanted to show some interesting chart pattern. Here's the euro versus US dollar. These are multi-year lows, but here we can see that we had 1, 2, 3, 4 spikes that were all rejected in this 1.04, 1.03 area, and then on last week we actually rallied here with a tiny little gap there. So there is a little bit of, well, there is actually quite a bit of buying interest at this low prices, and this is normal because it looks like we had a breakdown. Well, this is a bearish chart still. So we had a breakdown, multi-year lows, and we need to see a bounce before the shorts come in again. Or it's possible that we're going to get a reversal. That's also a possibility. For now, I don't see a major reversal. I do see a minor reversal, potential minor reversal here. British pound versus US dollar. I think it wants to test this spike here from October. It already took out this low here from late October, just on Thursday. So I think we may see kind of attempt to retest this lows here, basically. And on weekly charts, it looks like, it's a little bit far distance from, this week to this week as far as the price is concerned, but it's already getting a little bit more reasonable to even contemplate buying British pound in this area with a stop below October low, if you know what I mean. But maybe we'll even get another spike down and attempt to take out this low again. Here's US dollar versus Japanese yen. We had basically we had a breakout here, and now we're seeing a throwback. How low this throwback will go is anybody's guess. On weekly time frame, I pointed this out repeatedly, that we had a strong, well, this was basically a short covering rally, and we are now at the point of where there used to be a lot of trading here around 116, 118. I said that this is definitely going to be a resistance area for US dollar versus Japanese yen. It looks like we are getting that resistance, and even this week we lost 2%. In other words, the yen strengthened versus the dollar. So are we done with this correction? It's difficult to say. We'll see how it unfolds, basically. All right, moving on to the topic everybody wants to know about. This is gold versus the dollar. This is a long-term chart going back to 1977, and this just shows a strongly negative relationship between the gold and the US dollar. In other words, if the US dollar is rising, gold is falling, and vice versa. Here we have US dollar falling for the past 3 weeks or 4 weeks or so, and gold is doing precisely the opposite. So here's the gold chart of gold on the daily time frame, continuous contract. So this is a V-shaped reversal. So we had it looks like a V. V-shaped reversals are not that common. More common are the W-shaped reversal, or maybe like they call them double bottoms or something of that matter. Right now, this is just a V-shaped reversal, and with all those things going on in the currency universe, it's difficult to say whether a dollar will resume its uptrend or maybe it will, decide to drop from here. But what I see here is that this is a very strong move that so far ended at resistance here at 1200, and you can see there was this big red candle with a breakdown, and there was another big red candle, and actually a couple of red candles here, an enormous volume. So there's a lot of resistance in this area here between 1200 and maybe like probably as high as 1338. I mean, there is a lot of negative, and there's basically a lot of damage to the bullish chart in this area here. Nevertheless, GLD, this is a daily time frame for GLD. We did manage to close this gap here. You can see there was a attempt to go high here. So far it was rejected with a filled candle. Same thing. I'm not sure, if this V reversal will be true. I mean, they do happen occasionally. The V reversals do happen, but they're not that common. So, it's possible we're going to kind of maybe pull back and possibly trade sideways. I'm not sure. It will depend on the dollar, honestly. Here's the weekly time frame. It's a little bit more clear in this chart. You can see a clear resistance with all those touches of that area around 1200. Here's another touch and then a breakdown. Now we came back right up to that area. We had 3, really bullish looking candles, so maybe now the bears come out. Who knows? Longer term, this is a weekly time frame going back to 2011 rather. So here down below here I have my proprietary market breadth index for gold breadth index, or GBI. So it turned bearish here in 2012. So basically all of this rallies or attempts at breakout I would have shorted. Here we had turned bullish here. The gold breadth index turned bullish in 2016. And here I am thinking that now we're still in a bull market. We have weakened considerably, and we're actually very close to still entering a bear market. It will depend on some factors having to do with market breadth. So here, actually, I'll show you some of those. Here's GDX, gold miners ETF. You can see the market breadth index for gold here. It's dropping steadily. It has not been able to yet rally. So, like I said, gold miners and gold is not yet in a bear market, but getting very close to it. And this rally has helped to at least hold the bears at bay for now. But I don't think we're out of the woods just yet. Ideally, what I would like to see is a strong breakout above resistance for gold, you know, and at least trading sideways, or maybe with a slight bullish tilt. But nevertheless, there's a little bit of a bullish divergence here on GDX, so you can see that we made a lower high here, clearly lower low. But there's a little bit of a bullish divergence on advanced decline line, advanced decline volume line, and on bullish percent index. So there's a little bit of a hope here that maybe we will see, maybe we'll hold those gains and like maybe trade sideways and then finally continue higher. Yeah, there's a possibility of that. But it will depend again on multiple factors, of which dollar is probably the biggest one. So here's the weekly time frame for GDX. We had 1, 2, 3, 4 weeks of appreciation. This week, this could be like a hanging man candlestick already, and it's smack in the middle of resistance. You can see last week we were also unable to penetrate, and this week again we're not able to penetrate, around 23 bucks here. So unless we kind of punch through this resistance, we could roll over and again retest the lows here. And here's the GDX on a longer time frame with the same indicator down in the bottom part of the chart here. So same thing, this gold miners actually look a little better than gold itself, because here you can see that we broke below this support, but here we're still kind of above the, you can say the breakout levels here. So there is hope for gold, but it will depend on the dollar whether or not this hope will be realized. All right, moving on to hard commodities. Here are the light crude oil, West Texas Intermediate on daily time frame. Last last week we hit 52-week highs for oil, but on that same day we had this very bearish looking candle. We had a rejection at the top here and selling throughout the day, and they closed near the low. So this is an outside reversal, and it seems that it is a confirmed outside reversal because we had a push lower. So now, if the bears are gonna step in here, it's possible we could continue lower from here. Those production cuts are already coming into question, but I think more importantly is that other countries, Europe, United States, are bringing more capacity online. So if they cut production in Asia, maybe the Americans and the Europeans are going to up production, and what that would do to a supply of oil, yes, we will see. But this week's candle does not look great already. It's already rather bearish looking, and also we had a gap down here. So it's possible that oil is indeed in the process of rolling over, and maybe we'll go to 40s or even high 30s. It's possible. And here's natural gas. A couple of weeks ago we hit 52-week highs. I actually mentioned that we were overextended here, and then lo and behold we had this big gap and continuation lower. But I think we're, this is still a bullish chart. This is 52-week highs. There's still an uptrend. Maybe already we're finding support for another push higher. It's entirely possible. Here's that same chart on the weekly time frame. Here's that candle I was referring to that looks like a rejection candle, looked like a rejection candle. Indeed, it turned out to be so, and we had a rather big gap here, and they pushed lower throughout the week. But now it looks like we're again, here's a weekly hammer-like candlestick. So it looks like we're finding support for natural gas. All right, if you like what you're hearing, please do hit the like button on the YouTube. That's thumbs up. And feel free to share this video on Twitter, YouTube, wherever you have subscriptions. Again, thanks for watching, and please consider signing up at MasterChartsTrading.com and stay tuned on how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members, so that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right, thanks for watching, and please consider signing up for the trade alert services. Bye-bye.